Although Africa remains marginal in the portfolios of some large DFIs, it's rapidly growing in importance as an investment destination, with a large portion of funding for small-scale renewable projects in rural areas currently being funded solely by development finance institutions. So let's delve into the role that DFIs are currently playing in Africa. Suresh Chaitu, Head of Banks and Development Financial Institutions from RMB, with me in studio. Thanks for joining us, Suresh. Now, I know you're a busy man, traveling off to most countries in Africa. You're trying to touch base on most countries across the continent. But give us an idea of the type of role that DFIs are playing on the continent right now, and the relative importance of African DFIs relative to ones that are considered more international DFIs. Well,
firstly, congratulations on summit in Kilimanjaro. Next, it's K2.
Thank you. Well, K2 is, I think, a distant dream, but I think I'm just trying to recover from Kilimanjaro, and I hope you're going to try it one day.
Yes, no, definitely. It's on my radar.
Is it on the bucket list?
Definitely. DFIs have certainly played a very crucial role in Africa, Sam. We've seen that through the subprime crisis. They're in growing importance in terms of countries that perhaps had a bit of political strife. We're seeing the increasing role in alternative energy projects, in infrastructure, in trade finance and in project finance across the African continent. And I think there's a lot of mystique around what they have been doing, but we've been seeing, I think we'll unpack that a little bit later, but we've been seeing increasing importance by both African development financial institutions as well as development financial institutions outside of Africa.
How are banks like yourself, of course being RMB, collaborating with DFIs? What type of, what's the nature of the partnership that you traditionally see with DFIs on the continent?
Well, Sam, let's step back a little bit. You know, a lot of these DFIs are funded in two ways. One, they're funded by member states, that is countries in Africa, as well as countries outside like China, etc., who will actually be investing equity into these to actually keep these DFIs going. In addition to that, these DFIs raise money not from customers but from the wholesale market. And we as banks would be arranging and organizing this type of funding. RMB recently raised $600 million, for example, for Afro-Exim Bank for its role in playing in infrastructure and trade finance in Africa.
So you know, you talk about Afro-Exim Bank. We've got PTA Bank, African Finance Corporation, East African Development Bank. I mean, numerous African DFIs. Do they have specific niche areas that they're focusing on when it comes to investment, or are they more general themes that we're looking at?
Absolutely. I think if you look at African Development Bank, really focused on the longer term financing of projects where commercial banks would not necessarily enter into. These are typical 15 to almost 25-year type of projects, requiring a long lead time, requiring quite a bit of infrastructure, and also which has a longer repayment profile. Let's give you an example: a water project or a dam project. Large amount of finance required, long tenure in terms of completion and repayment. And this requires really a sort of government-to-government approach where longer-term funding is actually required. So this would be African Development Bank. If you look at Afro-Exim, their role is primarily a lot on the shorter-term side, catering for trade finance. So you'd remember the strife in Malawi where aid agencies pull out their funds. Afro-Exim would assist in terms of oil and key commodity inflows into that country, and also in Zimbabwe.
Talk to us about the competencies rather that DFIs bring to the table that traditional banks don't.
I think, Sam, the first thing would be the tenor of type of financing that's required, where commercial banks cannot afford to enter into. And these are typical 10 to 15 to 20-year type of projects that require a large amount of capital expertise and infrastructure, and also has a longer tenor of repayment. These are the typical facilities that are largely taken care of by the development financial institutions. Also, some of the larger projects, remember, development financial institutions have what they call preferential creditor status in a number of their member countries. So it's much more attractive for commercial banks to follow development financial institutions, particularly when it comes to some very serious workouts in the event of default or protracted repayment. It's always good to have a DFI in those particular projects to assist. But the DFIs have played a much more important role. If you look at the strife in the Côte d'Ivoire during the civil strife in Côte d'Ivoire, immediately after that, a DFI called AFD, which is the French Development Agency, pumped in about 500 million euro just to pay government salaries and to keep the economy going. So they play not only a role in terms of infrastructure development, but very much in terms of intervention when there is civil strife.